This one's for the investors seeking hidden opportunities. Today, we have an exciting lineup of 3 stocks that are not only under $30, but also have potential that you simply cannot ignore. Get ready to discover these investment opportunities. Let's dive in. All right, guys, so we know price tags alone can't tell the whole story of a stock, and our regular viewers know that I do love a good bargain. And these stocks that we're going to talk about today are diamonds in the rough, so to say. They're just waiting to be found. So I want to get your feedback on 3 stocks that I found. They seem like great deals to me, but again, I'm looking for your answers on this. So first up on my list, I have Wendy's. What am I missing here? I mean, I know it's not McDonald's, of course, but what's the story here?
Right. It's Wendy's. They're the number 2 burger chain globally. They're not going to beat McDonald's at McDonald's game, but the entire fast food industry is hot. They're all growing. Wendy's is working on a global expansion. They just reported a really nice earnings report with double-digit growth. They're fixing the balance sheet. It's got twice the yield of McDonald's. But for some reason, the analysts seem to be lagging. All the other fast food stocks have shown up on MarketBeat's list of most upgraded names, but Wendy's hasn't joined the ranks yet. I think that could be a major catalyst for the stock going forward.
Yeah, I was looking at Wendy's too going into this, and if you're looking at Wendy's and McDonald's right now, both are trading around the top of their 52-week range. They're both a little bit expensive on a PE basis. So, as Thomas said, though, with Wendy's, you're getting twice the dividend yield you would get with McDonald's. So you could essentially own about the same amount of stock dollar-wise in each company, and you'd be getting approximately the same payout. So, if there's room in your portfolio for both, you could probably do both. And right now you could make a case that if you only had room for one, Wendy's might be the option to go to. Wouldn't you say, Thomas?
Right. That's kind of my feeling with some other sectors too, like especially consumer staples, because there's certainly some value and some expensive stocks in that sector. You get one of each, one low value stock and one high value stock. You balance them out. You get some diversification. You kind of get a good yield. I think it's a good strategy.
Yep. All right. Love that strategy talk. Let's move on to my second item on the list here. So this is a stock that I literally see being advertised everywhere. You simply cannot miss it. That's DraftKings. Chris, we did talk about this in a video back in March, but what can you add to that now?
Lacey, boy, if investors had gotten in DraftKings just when we talked about it in March, they've done really well. And if they were in on it at the beginning of the year, they've done even better. I think the stock's up, pretty close. It's pretty close to, I think, 100% gain from the beginning of the year. It's really taken off. There's a lot of catalysts going on here. They continue to get approved. Gaming, mobile gaming, online gaming continues to get approved in different states. So, right now, I see analysts are upping their price targets. That's nice. Otherwise, which is kind of encouraging to me, because otherwise the stock is looking a little expensive. But, I'd like to hear what Thomas has to say about that.
Right. But, they're the leading gaming site in the U.S. and they're doing their expansion, but they're also maturing their existing territories. And that's bringing profitability into the picture. They raised guidance for the year. That's what's leading the analysts higher. I think they might raise guidance again just because the penetration and then the deepening penetration of existing markets.
All right, so my third pick here, it's a fun one. We're talking about Six Flags. I see a lot of people on the MarketBeat platform. They're searching for details on Six Flags. It's constantly showing up in people's watch lists. So honestly, it seems like a no-brainer pick to me, but would you guys agree?
Well, this is a contrarian pick for me. And the way I look at it is how you feel about Six Flags really depends on how you feel about the health of the consumer. Because but it could be a case of heads you win, tails you still win. Amusement parks tend to be an economical alternative for families, and in the case of Six Flags, a lot of their locations can be done as a one tank trip for consumers. So there could be an opportunity there. One thing that I was really encouraged about is their first quarter revenue and earnings came in approximately in line on a year-over-year basis. And the first quarter tends to be their slow quarter because obviously for some of their properties aren't operating during that time. So that's somewhat encouraging going into this time of year. Analysts are saying there could be a double-digit upside to earnings. So, you know, it does look promising.
Right. I think this is maybe a dual play with the travel rebound. People just want to get out more because things are open. You can go places now. Travel is hot across all sectors, I think, right now. But also, like Chris says, it's kind of a value play for a family. It's an easy trip. So maybe you don't go to the beach, or you don't go to the beach twice this year, and instead you do a trip to Six Flags or something. So
makes sense. Yeah. All right. Well,
And
thank
also,
you guys.
actually, Lacey, I'm sorry, Lacey, I was just thinking about
go
when
ahead.
Thomas was saying that, you know, it could also be an alternative for some families that may have been planning a trip to Disney that maybe they're not planning because of the economy. Now a trip to Six Flags, they still get some of the coasters and some of the other things. Of course, they lose out on some of the other experiences of Disney. But if they're just looking simply to go for some place where they can go to an amusement park and ride rides and stuff like that, that's where Six Flags might get some of that business.
Well, that could be a boost for the entire local entertainment industry. If people are like, we're not going to travel someplace to do a really big, expensive trip, we're going to do more small trips near the house. You know, that could be all the amusement parks, the movie theaters, all that stuff could get a boost from that trend.
I'll take more small trips over one big trip any day. I don't know. But all right, guys, thank you so much for exploring this lineup of stocks with me today. I think that we've found some hidden gems under $30 that are packed with potential here. So whether our investors are craving a tasty investment like Wendy's, or they're seeking thrills with DraftKings and Six Flags, the opportunities are out there. As always, we're going to be keeping an eye on these stocks and update you here right at MarketBeat. So we're going to see you soon. Thanks, guys.